Welcome back to another awe-inspiring, exciting episode of Crypto Espresso, your teeny tiny daily shot of caffeinated crypto headlines. I'm your host Andrew, and today we take a look at the holiday that falls on today. And that happens to be Popcorn Lovers Day. Well, that's me. I'm actually a popcorn lover. Really, it should just be called Andrew Day, because, we're one and the same. Anyway, I have crypto news to deliver. I'm between eating this popcorn. It's so good. First up, in some ways, the writing was on the wall for this story. Silvergate Bank is winding down and entering into voluntary liquidation. It stressed that all deposits will be repaid in full. The crypto-friendly bank was a vital cog in the ecosystem and served as a fiat on-ramp for many businesses in the industry. But Silvergate was badly burned by the bear market and toxic exposure to FTX. Bitcoin fell below $22,000 as investors digested the news, but some analysts believe that it won't have an impact on prices in the long run. After SBF's crypto empire spectacularly collapsed, customers have rushed to pull their funds from Silvergate, which helped contribute to a painful $949 million loss in 2022. Untangling the mess that is FTX is getting expensive. New CEO John Ray, who charges $1,300 an hour as chief restructuring officer, billed a jaw-dropping $307,851 in February alone. And while some might say that this is value for money given his experience and track record, this is a bill that will be footed by FTX customers. But of course, that's just the tip of the iceberg. Sullivan and Cromwell, the main law firm working on the case, billed a jaw-dropping $16.8 million in January alone. Some of its partners charge an hourly rate of $2,165. Another big expense comes in the form of the consulting firm Alvarez & Marsal, whose invoice came in at $12.3 million for the same month. So let that be a lesson to anybody listening. Lawyers, they're expensive. In other developments, FTX's new management has also put forward a key employee retention plan that's designed to ensure critical workers won't jump ship to other companies. This is a common part of bankruptcy proceedings that's been seen with other crypto firms that have gone bust in recent months, but it might rub salt in the wounds of creditors. Overall, FTX is now seeking court approval to award a total of $4 million to a small group of crucial personnel, with $1.4 million to be shared between 10 specific employees who are key to the success of the Chapter 11 case. It's argued that this plan is necessary because 130 people have resigned from FTX since the bankruptcy, with many others now receiving reduced pay. Meanwhile, there are rumblings that SBF's legal team could push for his criminal trial in October to be delayed. His lawyer, Mark Cohen, has written a letter to the judge to raise a number of concerns. A substantial portion of discovery is yet to be delivered to his client, and because SBF is forbidden from using virtual private networks, he's been unable to access FTX's transactional database. Cohen is now calling for key dates in the run-up to the trial to be pushed back, and he warned it may be necessary to request an adjournment of the trial, currently scheduled to begin on October 2nd, 2023. While we are not making such an application at this time, we wanted to note this issue for the court now in case we need to revisit this issue after receiving the additional discovery. And if you want more FTX after all those stories, Leo Jacobson has written an in-depth piece summarizing the current state of things at the doomed exchange. From the criminal charges that Sam Bankman-Fried faces to the plea deals reached by his inner circle, it's a great read if you want to get up to date on the case. We also look at the separate lawsuits filed by the SEC and CFTC, how SBF's bail agreement has changed following some concerning infractions, and the battle to claw back missing billions of dollars for FTX customers. And finally, in non-FTX related news, the SEC's Gary Gensler has made his views on Ether crystal clear. It's a security, especially after the switch to proof of stake. But speaking before US politicians, the chairman of the Commodity Futures Trading Commission has suggested that he does not agree, and that the world's second biggest cryptocurrency should be regarded as a commodity. Both agencies have been stepping up that rhetoric as Washington decides how digital assets should be regulated. CFTC Chair Rostin Behnam said he wouldn't have allowed ETH futures to be listed on exchanges unless it was certain that they were commodities, adding, "We have litigation risk, we have agency credibility risk if we do something like that without serious legal defense or defenses to support our argument that that asset is a commodity." Geez, I really wish that the CFTC and SEC would fight over liking this video, subscribing to our YouTube channel, and clicking on that little bell icon to get buzzed whenever a new Crypto Espresso video goes live. Man, if only. And what'd you think about today's episode? Well, we have no comments again, so I'll never know. Dang. Questions about our headlines or crypto in general? Why not ask Alex in that description below? Alex is always a great resource for all things Web3 and the metaverse, and that about does it for today. Again, I've been your host, Andrew. These have been your headlines, and we'll see all of your beautiful shining faces tomorrow.